wave attack or something, I guess you can call it. Because I put Elliott on a side for a very long time, as you all know that. You know, I don't know how long I'm going to be doing this, but enjoy as long as it lasts because it's I've done it for a very long time. Then I took a long break from it. I kind of like go, when went back to it. The reason why I did is because the where's the this I like this. I know it's it's ugly and nobody is happy about them. I like this. Okay. So this is 9 weeks decline, 12.7, 9 weeks decline, 9.8, 10 weeks decline, 10, 12.1, 7 for 10 point. You see, like everything. So now if you look at the time wise, right? 9 and 9, and here you have 10 and you have 7, right? But when everything lines up like this on a swing side, because we have the exact measured like decline based on price and time, that helps the Elliott wave a lot. Okay, then they're gonna go sideways, so they're much easier to label a wave count. When you're a little bit short here on time and you kind of extend a little bit more here, okay, then it makes it very difficult to label the chart because you don't have enough decline on one side compared to the other one. So your retracement levels, your ratios, your fibs, they're all gonna get changed. Okay. So you're basically fighting bigger decline, okay, compared to the one that is not giving up much, right? So so if when you have that kind of a spread at a gap between them, your label is not gonna match, right? And your retracement, like it just makes it really difficult to match a wave count side by side. Now we can. Okay, that's why I was like, I even pointed this thing out a couple days ago, and I said, like, you know what? I was like, I know it's as many people like they are thinking like that they never seen 10% dip before. Okay, it's gonna be over, but it just the for me for charting for as much time that I spend on charts, it helps a lot. So that's why I start doing this. As you can see, this is what we've been tracking now and every day on a 1 hour chart is plenty of time. First of all, 1 hour chart can run okay for like over a month or two. You don't need a daily chart, you don't need a weekly chart. Okay, get the thing out of your head. All right. 1 hour chart is good for a couple months. So however this thing will work out here, then I can fit into the higher time frame. Higher daily is just 1 bar for the whole day. Here you can get to see at least a little more action here. Kind of gives you a little dip here where where the zone is. Can kind of gives you a little bit more movement. Daily is gonna take months and months for to shape up. Okay, so it's absolutely pointless to spend much time on a daily time frame, but you just only take in 5 bars per week. Okay, and then the week ends, you have 5 candles. So this one, I so we have the March low, which is right there. Okay, on this side right there. So this entire decline right there, what I from the top right there, 7,002. I if you see this pitchfork right there, right? This is on the just on a log scale, and from this low right there, look at this low, and then from here, in this one, we got this throw over here, right there. So we have several bars, right, from here that open to the downside. So we have a throw over here. So what happens after that? Price made a mean reversion back inside the pitchfork. So same thing happened here. We have a throw over here. We'll mean revert back inside. Same thing happened on a cycle as well. Throw over on a cycle for a day. Price mean revert back inside. You see, I've told you this thing many times as well. But that doesn't identify or gives you the exact bottom. Okay, I know that everybody dream is to pick tops and bottoms in the market every single day. The obsession that some people have of calling tops and calling bottoms, it just it's beyond ridiculous. But so we have so the point is like the decline right there has a lot of overlap. Okay, you have huge retracements. When you have a trend, trends are always more directional on one side. Every time when you're gonna start seeing one dip, even the fact that price does make a lower low, and if it reverses all the way back up to 78.6 over and over again, okay, that's not a clear trend to the downside or to the upside, either or. Okay. So you basically what are you doing is you making a move up, okay, or down, doesn't matter, and you coming all the way down here to 78.6. Then you make a move here, then you coming down here again 78.6. When you have these kind of a large, huge swings, swings usually finds takes a pause around like 38.2, close to 50% retracement. And then from there, price needs to find his way in. If the buyer steps in, is to try to see if the price can make a higher high. But not in this case. In this case right there is when you had a huge rally up and then it goes all the way back down towards 78.6. These are the days that most of the time that turns into a doji days. Okay? Those like buyers cancel the sellers. So you just had a full complete doji. So every time when you had a huge like one huge pop, then the next day and it just literally fades. Basically, you just like whatever you gained one day and you gave up everything the next day, coming all the way back down to 78.6 because this market is where the liquidities are on the bottom side and the top side, and you just like wiped off everything what you gained yesterday came down all the way down to 78.6. These kind of a huge retracement is going to leave the body of the candle completely shallow. So you basically have a buyers and sellers that just cancel each other out. So we had that issue last week, and then when we had those three dojis in a row, remember? So these these moves right there is you see huge move, 78.6. Then you got a higher high here. Big huge dip down, seven. You see, like you keep ripping back up into that 78.6. That's why you had those three dojis in a row. And I was like, this is pretty rare for 3 days in a row that everything is getting canceled out. So right here off the low, this is March low. This is March low. And on the daily side yesterday, I looked at a bunch of buy signal triggered, right? So the other side where the signal trigger, that's more mechanical, right? Because it's trading, it's measuring the highs and low swings along with some of the moving averages, the ATRs and things like this. So so that is more on the mechanical side. There's no moving averages here. There's no indicators here either. This is just a plain label Elliott with a just you have a wave count um, with channels, fibs. We will build, and you have zones, yellow zones, and you have green zones. Okay, yellow zones are the ones that we monitor to see if the price comes down. How does it react when it tested that zone? So basically, what you're looking for is is we're looking for a cluster of fibs. Okay, it's gonna build those zones either to the downside or to the upside. And how if it breaks it, if it tested it, how does the price respond there? Those are this is what we watch on day-to-day basis. Okay, so each session will have what, 6 bars, right? 6.5 hour session. So you have 6 candles. By the time the session ends, it will just halfway where the candle will close and it will just end the show. Um, Now the thing is like, well, if this entire decline down is only a Y wave, basically, which is a 3 wave correction, right? But the point is now is like if we do come back down this month, okay, and we take out this March low here and on this side, okay, and then you gotta have to remember this that it will flip the monthly swing down. Remember, this is going to be a defensive month. Is to save the monthly three uh, 3 months of lower lows. We have 2 so far.
Mo, quick question.
Mm,
If we get an inside in April, but we break the March low in May, will it
yeah.
still turn down?
No,
Okay. So that's what I think is
yeah,
probably
you
more
need 3 in a
probable.
row. Yeah,
Yeah.
your
You
sequence
get
will
the
break.
you get the retest at least in May, not April.
Correct,
Yeah.
correct, correct. So the point is if okay, this is the big if the low breaks, okay, on the S&P and Qs, which we will track this, you know. I started to post this thing on a Twitter as well. Some people really liking them. It's like this is really cool. And just looking at them side by side, you know. And I was like, okay, let's fight it and see how it goes. So what I did yesterday is I put invalidation here. This is the invalidation for the buy signal that triggered on yesterday, right? On the cash and on the Qs. So I put it up here 564, so 63.95. So that's the invalidation right there, right? So if this price does dip below this, it means that the daily signal failed. Okay, if that failed, we just gotta have to watch and see if this low is gonna hold. The low right there is 63.13. Yeah, 63.16. So this is the low. Um, right there. So we can make this thing a little bit bigger. This one right there, damn, look at this fib. Oh my God, that's why I was like, look at the low here, 55, the 5 versus 1, almost to the damn penny. The low was 55.60 and this fib is 55.50. And this is what I was like, I gotta go back to Elliott Wave, the way I label counts. Um, you don't need to worry about anything, okay? You don't tell me how to label a wave count either. I don't need nobody's help. Just I will show you. Okay, we're gonna build zones. Um, I did this one when we closed Thursday, correct? I was like, okay, we're right here, and if we do set back, okay, this is where gonna this is the session that we're gonna be watching, and then his stupid speech came overnight, and the futures got heavy. Then we opened yesterday and put up a low here at 64.74, right in this zone, right? And then from there, the market managed to recover, closed flat for the session. So what is now the point now is like, okay, do we so one positive sign do we have right now is that we have a buy signal. Okay. So that's the one positive that we can take. So now we have a lot of negatives. Negatives meaning that we have daily swings are down. Okay. We have weekly swings are down, right? So in daily to flip first, weekly is not going to flip because it takes a lot longer time. We need daily to flip first. So in for daily to go up, we need 3 days of higher highs, correct? So market is not giving that 3 days of higher highs for a very long time. It goes up 2 days and it fails. Okay. As soon as gonna put the 3 days of higher highs is when the market is gonna put at the temporary low for sure. Okay. You don't S&P once it takes three days up, is not it will pull back. That's the pullback we're gonna buy for sure. Right. But it doesn't instantly washes out. So now the thing is the S&P, where it went, the right there. So what's the story right there now is, so now these are custom bars. Okay. The custom bar mean is like whatever the 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 swing will turn direction, okay, is gonna have a red candle like this. And then every time when it's going to flip up, it's going to turn to a green candle. It's going to be that green candle that particular day will tells you the direction of the swing is up now. So this, since this day right there, okay, because this one right there was the outside bar, lower bar, lower bar. So that makes it three, right? So the swing flip. Since then, this was February 13th of last month. Oh, sorry, the month before, because we're in April now. S&P hasn't got 3 days of higher highs yet, correct? That's why with this swing got extended down to 32 days. B32 is 32 trading days, which is on a weekly side was only 9, correct? But if you count number of days, it comes out to be 32, right? Since February 13th, as you can see, because as the bars will stay all black when the swing will flip, okay? It says one is gonna turn either green or is gonna either turn green or is gonna turn red. Okay. So like here, you see this one right there with the gap down right there, you see this red right there, you have the swing direction turned down. This is the go signal that I follow. It's in there. So you have 1 day, 2 days, 3 days. You see right there, it turns green. Now you have three. So it turns green. So then it stays green. The green will continues, and then it's gonna roll over when it will have one of these red ones. So since February 13th of an S&P on the S&P, it hasn't got any green yet. You see, lower bar, higher bar. That's so when you have a higher bar, that's day number one. What happened next day? Lower bar doesn't work. You need three in a row. Okay. So market is not given three in a row either. Look what happened yesterday. We put a low here, higher bar, higher bar. Yesterday with a drawdown, lower bar. You see, it end the sequence. It's keeping the pressure on the market. So then the last week that we were dealing with these three dojis. See, this is a doji. Any yellow highlighted part is a doji candles, right? So I had three in a row last week. So these are all black. So it's looking for three in a row. So we're not getting it. It's been a very long time. I know it's a freaking pain in the ass. I just like every time when I see 2 days up, they're like, okay, well, here comes a decision day, which is third is always gonna be the defensive day, week, month, quarter, yearly, whatever time frame that you watch. Third is is when the decisions get made. The buyers have enough strength to rip the market up, or the seller is gonna come in, is gonna flip it down. Okay, so I mean, okay, is it an oversold bounce? Is this more further continuation to the downside? Are we gonna rip back up? We come down? I don't know that. Okay, nobody does. But we're gonna watch and track to see what happens. If this entire decline that we had all the way down here to 36.16, we need at least five-way moves to the upside from here. Okay. So when you have a three-wave decline, the next step is five waves up. And then that five wave leads to another three-wave decline to the downside. Correct? Every five waves will correct, it will have a counter trend down in the three wave. So we have a low here, we have a high here. This move right there alone this week was 4.63% on the cash and 5.78% on the Qs. Okay, that's a huge move for 2 days. Huge. This is the largest percentage move of this entire decline coming down from the highs. So now the question is like, okay, now what we need is that we need at least to see if we can try to develop some sort of a reaction to the upside. Because if this is, so this is the alternate path, we'll talk about that. So in order to make a five-way move, so we have a low here, we have a high here of 66.09, and we have put a low here of 64.74. Now the question comes in, do we make a push up and start counting those 3 days that we're looking for? Okay, toward the 66.46, 66.94, 61 point at 66.71, 200% here, 100% here for the measured move, meaning distance travel here from this low to this high, projected from this low, lands them at 67.75. That will be the equal measured move. Okay. So that's the upside path right there. Okay. Now we can make that case taking only the daily side, which is the daily signal that we have, against the 63.95 low to see if the price can come back up toward this green zone. So we're going to have a yellow zone and we're going to have a green zone. Now the question comes in like, okay, well, can we tip back down like this one more time? Yeah, of course we can. Okay. So does this goes like this and A, B, and C? So the two kind of lands here. Then is way uh, uh, work his way up, or this was all of A, B, C right there. That was A, B, flat, C, the flush down here yesterday. So this is valid, right? And that's where the response came yesterday. So this was all. It does this goes like this. We don't know that how it's gonna go. So we're gonna track this every day and see how it goes. So this is the upside projection. Now it doesn't mean if the price does manage to come back here, or this is the one, and all of a sudden we're saying like, oh yeah, this is the third wave, which is a rip into the upside. Because if this third will come, it's gonna go. Okay, third usually don't stop. Um, these ones really don't back off. If I could make a case here of a third wave up here, and that could help the 3 sessions of a higher high, because third is going to go according to the Elliott, right? Is the most powerful wave. Then we can say like, okay, yes, after being down for For 32 days, we should have at least got 3 days of an upside, or we're just gonna grind sideways for a while. Okay. So there's many ways we can do that. I mean, this thing right there can turns into a pretty good inverse head and shoulder as well. You can do this as well. Okay. You have a left shoulder head here. This one right there can go like this. Kind of take a little more, another day or two just to form the right shoulder. And then from here, you can make a case like this. That's one way to look at them. Look at just if you like a pattern guy, yeah, we can make the case there. I can do the same thing here as well. So it really doesn't matter. You do it on there or here. It's the same thing. Price is price. Okay. It's not going to change on one other screen and it's going to look different here. We're just trying to identify to see like, okay, because Gann and Elliott has a pretty strong relationship, okay, which I have merged this thing years and years ago. So I know what to look for. I know how to count the number of days. What higher highs do we need on the Gann side to make the case on the Elliott side? You know, Elliott is all about pure fibs. It's all fib work, okay? Which you don't have to worry about that. So, so the point is, if we we start developing some sort of a five-way move, then we'll have some sort of a three-way move to the downside. Then we can make the case to, going up from there. We'll see how the wave, how the price progress, what's the updates on the war, what he has to say next, with oil settles. To me, if you ask me, oil is pretty capped. Okay. This week, oil was up 10.75%, has not made a new high yet. So it's been what, more, it's been 3 weeks now. So for 3 weeks in a row now, the crude, the CL has not made a new high. The new high is 119. Uh, right there. So it's been 3 weeks now since this high was made back here. Hasn't made a new high, right? It's pretty cat. I just as we talked about this thing last week as well. Price can go up and kind of test this 122 just to kind of poke above, but it's not gonna. No, there is absolutely not a chance in hell I can make a case for this thing to extend much. Okay, you're not gonna break 261.8% upside without some sort of a big pull, like a setback. So, like, same thing here. Would love to be doing the same thing on the Qs. So they're literally identical. Same thing, WXY down here. Five, just so much overlap here, but whatever. I mean, looks fine. Three down, three up, three down. Okay. So now the question comes in this. Okay. I know we're starting out a new month and we're starting a new quarter. And what if this entire decline is just a three-way move? Okay. This is why I put this alternate here at the same time with a reason. Once we will have a further confirmation, meaning when we will have um, a weekly buy signal, right? And at the same time, the daily holds. So daily has to work for a couple days or so to help the weekly side. Weekly is gonna give us the green light when I'm gonna start seeing all these generals are start triggering when when the when the market breadth will improve and when rotation will improve, when we'll see the growth is starting to catch momentum right there, that's going to be the green light. So there's a lot of buying coming in the market. Okay. and just get ready for that. I know I'm not pressing too many trades either. As you can see, I've been a little quiet. So, I put few trades on and I'm just like, okay, that's it. We I would, for now, we're going to keep our sight toward indexes and SPY and stuff on butterfly side, right? Market goes up, kind of stays down, stays there sideways. We just try to see if we can collect time, right? When I'm not attacking stocks yet, it just, we don't have daily. I know are shorter swings. It can give you a temporary relief, pop something, and they can instantly roll over. I need weekly. Okay, weekly is everything. Trend builds on a weekly time frame. It never builds on a daily time frame. If you are thinking that a five-wave decline on a daily or can is doing all the damage, then stuff, absolutely not. You're completely wrong. Institutional positioning is all based on a weekly rotation and a weekly time frame. Okay. Higher the time frame is, better the read is, better the cycle works. You see, I just showed you the four. You can't do that thing on a daily time frame. The this you can't make a like a. How are you gonna count 40 weeks? Or basically on a daily, you have to count number of days. Cycles is just they're very hard to identify and to make a case on a daily time frame because weekly is everything. You have no rotation confirmation on a weekly time frame. It's tough to fight the upside. It's always been this way. It always will. Big money, they don't trade noise. Daily is noise. That's what the every small account guy is gonna look into thinking like, yeah, I can just call out a one single day and see my puts can just fly next day. It's all daily noise. you know Yesterday, Optima posted this thing. I was kind of paying attention to this. They The sentiment bull and bear spread. Okay, they ticked down by point one and is negative for the 7 consecutive weeks. Okay, the 12-week average is now negative. Okay, fine. Yeah, it's getting worse and worse. I even wrote a comment to them. I told them, I was like, bearish sentiment after a multi-week drop isn't new. You know, I was like, it's what always shows up late. This is where positioning gets cleaned out, not where it starts. It's not where the trend starts. So if you look at him here, I was looking at this thing yesterday when he posted it. So watch this. So the sentiment is in a toilet right now. Call it like this. Okay, the worst it has ever been. Right, the world is gonna end. That just call it like this. This is gonna this like this war will never gonna end. And then things just gonna get worse and worse and worse and worse. Right, everything gets go worse to the certain time. Right, it's not gonna stay. It's not. It doesn't just get worse and worse. Once the market sells, when market gets oversold, doesn't mean it's gonna stay oversold for an extended period of time. Market can stay overbought for an extended period of time, but not an oversold. Okay, it never happens. It reaches to the extreme level, and that's it. This is where the new positioning comes into a play. You don't sell a 12 RSI read on the S&P because this thing is gonna make a pretty sharp mean reversion back to the inside. Uh, try to make take a move back to the upside. So a mean revert from any extreme move, that doesn't mean that the low is in, or we're just ripping to the upside. We can, okay? It's not like we haven't seen that movie before, that the market hasn't made V-shaped reversals. It made several of them. So the point here, I was like, like this dip right there to April low, full V right there, right? So all these dips right there will end up going back. Like sentiment gets worse. So we saw it fine. We saw that over and over again. They improve for extended period of time as well, right? So nobody knows that. So don't judge those. I mean, yeah, this is surveys, fine, we can get that. Okay, so let's make my point. The point here is this is I looked at them yesterday. Sentiment get worse right there. Okay, this is the weekly. So we know that we have a 9 weeks of drawdown, correct? Meaning from the top, from the high right there. So if you look at them here, 1, 2, 3, 4, 5, 6, 7, correct? Sentiment is like this is right now that we're seeing right there, correct? The well, actually, this one, one, two, this is April low. 1, 2, 3, 4, 5, 6, 7, 8 from this high right there. So this is 7. This was 8. That's what I was saying for the next week. You might go kind of sideways chop just to keep the pressure on. I want to watch this next week pretty close to see how the sentiment, because this decline right there, okay, will match the same number of weeks on this side as well. So every time when you have two equal declines, basically to the downside, and that's when the market always going to try to show you some sort of a response to the upside. So it's 7 against 8, right? So I know we're starting off a new month and a new quarter as well. It's not like we just instantly, it's not like the war stopped or something, or this, um, the guy who's so happy blowing up a bridge. And it's just like, we'll see how the next week goes, you know? And I don't think that the market is gonna crack lower right going into an earning season as well. You know, I think the next catalyst for the market is gonna be earnings along with the war. Data is not I don't really expect the market is gonna really affect or kind of show much response based on the data. You know, I know that a lot of people expectations are basically, markets are always forward looking. So they're just thinking like, yes, oil above 100, inflation up, yields up, everything is down, this and this and this and this, right? So everybody can make all these cases. Yes, we know all these inverse correlations. Okay, we know um, Fed is going to take a pause. There's not going to be any more rate cuts anymore. There's everything like this. It's always like this, you know. But the point is like what happened here, here, and here is not any different than with what's happening right now. It's happening right now. That's what is triggers everybody's head right now. Nobody look at them, the the actual picture, what the market is actually telling you. Step back, take a good look at the market. What is the market is actually doing in front of you? Last 4 years, you know? But at the same time, everybody, oh, top is in, top is in, top is in, top. Like every dip, 10% dip right there is just, oh, this time is different now. Any new high, okay? Any new high. The top is in. This is what everybody wants. It's just like to just sit and call the top. Just keep calling them every single month, and then you end up making the market end up making a new high. Okay, you know, well, he's happy for that short period of time, and then all of a sudden, like, okay, and then new high. Oh yeah, the top is in. It's this kind of a childish talk, you know. If you have a mindset, a style of like with no experience whatsoever and thinking and calling tops and bottoms, you're an idiot, in my opinion, to be honest. First, you have no clue. All these just throwing out there. It's like, grab like what you call like what those spaghettis and just throw them on a wall and see how many gun will stick. I doubt anyone will stick. But you just say like, okay, there might be a chance one might stick. But that really doesn't mean that, yeah, I mean, the 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 you looking at like this. So this oil, so this 100 barrel oil, what you think is gonna take the S&P like this? I mean, just yeah, yeah, I mean, if the oil rallied to the extent to the extreme level, how much you think is gonna go up from here? I can show you thousands of examples how price reacts when it reaches this extreme level. And what makes you think that oil is going like this for the next 9 months and market is going to be doing this where you already sitting near the extreme level? So there's a lot of ways, like technically it just doesn't. I'm not saying that the market cannot come back down, of course it can, but I'm not saying the market oil just doesn't have much upside. Okay, if there is like because it is in a real uptrend. I get that. Okay, and it's not. It just doesn't have much upside. I'm only talking from what has been the what is 12 weeks now. So it's been 12 weeks. So 12 weeks, then you take divided by 4 weeks in 1 month. That gives you 3 months. So call it like a fun full quarter. But at the same time, okay, S&P is so this is what the oil is. So 100 oil does 3.84% worth of damage to the market, to the large cap. Couldn't do anything to the semis. 4.77% here in the first quarter, right? And then transports 1%. So if 100% why transports are sitting flat? Couldn't do anything to a small cap. And this one is at 3%. This is 100. This is what I'm saying. This correction, okay, is a rotation. The war kind of dumped right onto it to make the sentiment worst. But it's a correction. Market don't tip over, okay, when you have that many sectors up. You would see a full sequence of red across the board. That's why this market is not is coming down. Okay. So the market so the market right there can come is is pulling back. This 10% dip is very weird. Okay. It just I'm connecting a dots. Okay. This is what I look for. A lot of things. I'm looking at data, cycle, like all like a bunch of things just to that's how deep I analyze the market. It's just it's you don't have a VIX that is making higher highs when the S&P was making lower lows. That is your number one sign. Okay. And the same time right there when you had a massive spike in oil, oil is not making higher highs from the last 3 weeks either. So it's been what 3 weeks. So you take the last 3 weeks and you add one more week to it. That makes 1 month for I'm talking about last month, right? And last month, that's what I'm saying. This is why it's only down 3.84% because you don't have that inverse relationship. You should see like, okay, if there's a really selling going on, okay, across the board, you would have seen VIX making higher highs and S&P's making lower lows. If this war broke, with this huge spike that it had, you should be seeing oil start ripping to the upside. That's what the overall broad market to be, to the downside. You got materials right there, 11, the up 11. Industrials are up 5.5. Well, industrial sector, what, doesn't
למה לא
rely,
הזמנת לעצמך בעלי
huh?
קייס?
It's just consumer
כן,
staples and stuff. It's just
זה
like,
לא הגיע. ועוד משמה.
it's like if you look at the rotation right there, and look at the data right there. Okay. So this is where we stand right now as of yesterday. We have healthcare, utilities, consumer financial, energy, communication, and material. These swings are all up here, right? And then at the same time, consumer discretionary, real estate, XLK, and XLI. These are the four sectors right there has the swing down. So where's all the generals are? Right here, right? And here, these two. And they're down what 9.43% and 5.54%, correct? And the rest are, you can see how they're doing. Same thing here. Low was in, 2 days up, yesterday down. You see? Because it's not ready yet. This is the problem. This is why I'm talking about this. It's gonna curve. When it does, when it will, we will be the first one that will know. Okay, I can promise you that. So you just gotta, you see right there, is this market is not gonna slip like what everybody is looking for, because what is gonna happen is that these ones that they're enjoying their upside right now will start losing momentum. Is this when this side is gonna pick up? When this side will pick up, that's when market is gonna go. Okay, so it's gonna take time. This is key right there. So the ones that got flipped right there, see financials. Look, low is in, 1, 2, 3. See, it flipped. See, this is not happening in XLK. 1, 2, failed. Industrial, 1, 2, failed. Consumer discretionary, 1, 2, failed. Because they're not ready here, that's why. You know? So Oh, this is the daily time frame. Look at the weekly. So it's gonna match. We need to find 3 days of higher highs. Okay, then the flip, then this thing flips.
Can you show XLF again?
The financial? You asking about financials?
Yes, yes.
Yeah, it just flipped.
Yeah, because I noticed that some like Goldman Sachs, JP Morgan,
Yeah, they're gonna
they
yeah
were
they're gonna
they were
affect
up.
me. You're gonna yeah. There's probably gonna be a buy signals on those ones. Let me see. Let me see. There's gonna have right there. Yeah, it's gonna yeah because of the rotation with the XLF. Yeah, the 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 daily is gonna definitely is gonna respond. The daily is just these. I mean, I do trade them. Don't get me wrong. It's just um I just messing around with these high and lows fibs of the Amazon. Now here's some 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 things that we gotta have to on. Okay, fine. We discussed wave count, which we all know. I don't have to go through them, right? So this is the whole world is watching as well. Where we at, how we can progress, make a progress from here, going up and down and this and that. So are you gonna take a dip down, go up? I really wanted to see what if whatever the upside will reach this zone is to see one and when this response, which is gonna happen somewhere around here. One throw over will meet with another one, you know? So I don't know yet. So I'm not gonna point out a certain because I know a lot of you start looking always down here like, oh, I want to know. Everybody's just like time the market. It's just, yeah, it's not easy. It's just too much. Um, I mean, I was gonna go back to the same thing what we're talking about is if okay, this entire decline that we had, right? Because this was gonna stay on the chart for a while, right? If if April goes inside month, right? Which we are gonna watch this. So our range right there for this month is 620. Oops, I need to turn the magnet on. So the range right there is 629.28. And then the upside is 688. We need to break one side. If we break this low, well, then this flips. If we stays in between, so then we just chop around in the full inside month. And if we measure this thing, let me see this, do the range from here to here is 9.3% range. That's a lot. I actually have this here. I have to show you this, the actual, this boxes. So this is a real picture right there, right? So we have a timing box. So we have a March high right there and the March low, right? Because this swing is coming out from February high. And this is a new box that just appeared now in the last 2 days. So we had 2 days so far, day one and day two. This was the month end. So now this box right there, right? Because you know the sequence that we did. We have a higher month, we use green. We have a lower box, we use red. And then if we're gonna have a neutral, we're just gonna use pink. So this one went up. See, this box is higher than the previous box, 3.4. This box is higher than this one, 3.1. This dipped down, so it went negative. This one came down, did negative, this one as well. So basically what it is, it's gonna gives you a visual read as well, that we have two red and we don't need the third one. Third one, it means then monthly goes, then what I'm gonna do is whatever this bounce is, that will eventually fail to take out this low right there. We have to go through with this, make this thing as a W, X, Y. Okay, so that's gonna be the plan. So that will not, so when are we gonna find out? And what if this box will shift lower? Okay, so as long as this box stays between the March range, okay, we're gonna be okay. I don't think, I mean, I don't know, anything could happen. I don't think a market is going to give up a monthly this month. Not looking at the data that we just looked at them, how the rest of the sectors are doing. It's a rotation. It's just what just people just. I've been making a lot of posts. Then some people get them, some people really don't see it because they're so um, brainwashed with ports all the time. It's not, I mean, it's not like we haven't took any advantage of downside. We did. I mean, you know, the last month. So it's not like we just like been completely sitting off and say like, hey, we haven't sold anything, not a single trade. I mean, we done, a few to the downside. I mean, nobody can catch every turn in the market. Just that doesn't exist, doesn't happen. It's never going to happen for anyone when the market shift and this and that. But I am really more I kind of sit back and kind of look at this picture, it just blows my kind of mind. Is like this is happening right in front of our eyes, and then just we hardly ever notice like what is actually market is doing. You know, it's just it's keep repeating 40-week cycle over and over again. Okay, and every cycle there is a 10% dip. You know, is nothing new here. And this is the fourth one, as a matter of fact, in the last 4 years. This is the October low right there, 2022. Every within, yeah, you can, I mean, yeah, the cycle starts here. It would have continued, but we did have a monster move to the upside since the April low that we haven't really backed off for like 8, 9 months in a row. Yeah, I mean, I don't know. Are we going in some sort of a choppy range? It's starting to look like it because for first of all, to make a case here for this Y, okay, you can't just imagine it or thinking like, yeah, this, I'm just gonna sit and keep calling this thing this and that. We need confirmation here. We don't have a cycle shift here for me to make a case for a Y anyways. Okay. So I'm not going to entertain that idea for it. I will leave those as is. Okay. Right there. I will leave it for a while and I know when to take them off, but I just don't see that. We need a shift here, basically on, I mean, look, what do we see any curve here? Absolute. There is nothing bearish about this market on a weekly time frame. Absolutely nothing. The This one right there is where all the noise is because everybody's focused on this daily time frame with the 200-day moving average. The 200-day moving average breaks is just the end of the world. This market has upside. I mean, things will change. I will know and it will change. We're already sitting, we're already sitting right there. The actual growth is actually sitting right. What do you think is going to happen next from here? This second quarter is going to be all about positioning. Now with these options and stuff with share, these will pay off. Q3 and Q4, I think it's gonna go. Here you got this quadruple top here. I mean, growth right there. I mean, this is a full trap house right there. It's all about here. First thing is this. This has to improve. Okay, we watch this every single day after the close. Okay, we need advances more than the decliners. Not like that's heavy. This is like a mixtape, right? So when we have those, okay, like you see right there, days after days, you see the rally right there, 1, 2, 3, 4. Like you see these bars. This is when the market breadth improves. This will work rotation. This side. When this rotates, momentum picks up here, it will work with all these other stocks. The other stocks will start to show momentum, is going to start firing signals left and right. I'm going to grab all of them. You just wait. I don't leave Mag 7 weekly signals alone. I mean, I'm in. Daily just kind of hard to fight because narrow swings and they move too much noise, you know? Yeah, I just gotta, I would, I mean, rather just kind of stay a bit more neutral delta right now and positive theta play. Basically focus more on butterflies. You know, volatility is a little bit elevated, which is good, and goes up, fine. It stays sideways, even better. Comes back down, we'll adjust. So it all depends how the cycle is, which way the cycle is updating, and then we'll adjust the strikes from there and just kind of, stay a bit more, you know, um, kind of like delta neutral, like a theta positive trades. Directionals are just, okay, you're just going up in one direction. That's it. Any downside market sells off, yeah, well, then you take the punishment. So we'll see how it goes. We'll take another dip down. Yeah, fine, anything is possible. But it's when I can, like the we have 100 here. Have that one. 69. This 100 and 613, 684. So yeah, just gonna keep them side by side and see how it plays out from there. Not gonna just waste too much. So from here, basically right now is if this move, first zone is this 66.46, 66. So you're always gonna look on the right side here. And then the 66.94. This is gonna be a green zone. So any upside from here would be, yeah, well, this is gonna be the minimum upside target. And then if it from there, if it backs off, whatever happens, well, then we see what makes sense and what I need to do. So we've been tracking this thing pretty hard lately. So enjoy while as long as I'm doing Ellie because this thing is not gonna last forever. Because if I'm doing this, it takes quite a bit of my time. I have to think to how to count these things, run these fibs and stuff, and all. It's a lot of work. Basically, that's what it is. And I don't like doing this in the middle of a session either. So I do kind of, we check back after like 2 hours when we have like at least, let's say like 2 hourly bars, at least, you can't, there's not much to do after every single candle or every single bar. So this one opens and closes after every 1 hour. So there's nothing, I mean, okay, there's upside path there. We know what the invalidation is. Where we have a yellow zone. Okay, well, that's it. Now we wait. So there's not much you can do there either. Yeah, these things I can easily go full April, May in the same, same read. So, I mean, I know if volatility expands, and once it expands, it's just like the the ranges expands, and then because ATR goes up, because right now, as you can see, the standard deviation move is at 102. Okay, so it's up there. So an average is 100-point moves, up and down. So it's pretty elevated, I mean it's up there, but it's gonna drop. Okay, and when I'm watching ATRs and things like this because the ATR right there is 106, which is the same one stand. I did a 5 standard deviation, which is the same thing. So this ATR range right there, okay, which is to the same 100, 102 range, is gonna drop. Okay, so because you don't like it's not like the market stays in this high 100 range, okay, for an extended period of time anyways. You don't really get there that much, more often, let's put it this way. It's just this drop, right? This is what we looked at on that choppiness index that I showed you before, right? That's getting a move up. That move up is gonna go. It's just, I mean, if I mean, I don't call, I hate to call that because I know that I could like can be wrong, and to me, I think we're gonna have an inside April. That's how I see it. Market just gonna they have a mixed sectors with performance, right? And even the fact that the we recently had the dip and stuff. I think this April is gonna go pretty range bound and kind of stay a little sideways. basically this box that we're looking at that just appeared like 2 days ago, it's just gonna stay between the March range, which is whatever orange is, high and low. If that happens, if the box doesn't really crack lower, or if it goes up, if it goes up, well, we need 6,900. And we have what a JP Morgan collar they put them on at 68.40 or something. They're trying to protect themselves at 68.40 right there, at that number right there. Okay, so they're looking at here. Their collar actually, I looked them up and it's like it's pointless to do it, to be honest, especially costs so damn much money to even do one contract for the one full quarter. It's they went a little bit neutral, you know. So they did I I don't know the tail they have. I don't know the strikes. There's something like this. So it has a flat line and a curve and this. So that's the color. So something like, yeah, they received a credit that they're gonna be end up making for the Q2. So basically is to price to kind of stay like this. And if the price does manage to rip above 68.40, they're gonna lose their ass off unless the price comes back down. So well, that's their hedge, you know. So but their downside right there, I think they did at I don't know what the strikes are, 60 something. This where right there is this color is gonna shine like hell. It's your tail right there. So you make money on a collar, sit in this. You make a lot of money this, and any upside from here, you're gonna lose your ass off. So you have 2-to-1 odds, you know. So nothing new about them. They're not every color they're paying makes money anyways. So it's pretty expensive as well. So it's just for retail, like large institutional, especially like JP Morgan Chase, who's trading in billions of dollars worth of people's portfolio money every single day. So for them is nothing because they're hedging. One collar on S&P, that's one they're doing, it's gonna suck up at least at least like 75, $80,000 for one contract on the collar that they're doing. That's how much one contract cost. So can you put your money on a margin, call like $75,000 for the next 3 months to either stay sideways to receive a credit or to make a lot of money if the market actually crash in the next quarter, meaning that it takes a much steeper decline. This just then hold your breath and see if market doesn't go above your top call that you sold, which is whatever the 68.40 or 66, 60 or whatever. So the market rips up to 69 plus whatever, uh, you're gonna you're gonna get hurt really, really bad. And that credit is just I don't know if I remember, I think like $75,000 or so for the collar, and the paid you a credit of like $1,300. Yeah, for a full quarter. Think about it for a second. So you deploy $75,000 to receive a credit of 1,300 bucks for a quarter. So, so if you deposit $78,000 into a saving account, you're not gonna make $1,300 worth of interest in 3 months, correct? They ain't gonna pay you that much. Nobody will. So, but this one has a massive upside risk as well. $1,000 trade. I find about, yeah, I can do it all day long. I don't have to risk, um, meaning to use $75,000 worth of a margin to make $1,000 trade. You know, so it just doesn't. Don't get too super excited over. Yeah, I mean, in the big massive institutional flow to a certain price does makes a bit of a level that you could watch to see like, okay, yeah, now there's a massive block of order sitting here. So yes, the the market will do what it will do, always does, so it doesn't mean that the market can reach to a certain block, it could back off. And what if in the second attempt it clears it? It doesn't mean like some people think like, yeah, I have a massive block of order here and this is it. The market is not gonna go up. Why? What makes you think that way? If this is the case, like when people doing all these covered calls and stuff, like, yeah, I'm gonna cap the upside. Okay, well, on the upside really gonna come at you, and then you say like, you know what? I was an idiot who sold the covered call. I would have never sold the covered call if my share is gonna go up this much because I gave up almost like 20% of upside in the last month and a half for a stock that just popped. Anything, I mean, stock can make a huge move, but I end up capping the upside because I wanted to receive a credit. Yeah, credits are any credit that you receive in the option market is basically is there's a certain level at the top that you just literally capped it. They're like, okay, fine, this is what I think the price of this particular security or stock will not exceed above this level because this is what I sell. That's where you cap the upside. As long as we stay down, yes, you walk away. And if the market if the price flip, here comes a punishment. So get ready for that. So yeah, margin is risky, it's dangerous. It can play out in your favor for some time. There's gonna be a trade that there is certain strike that you end up selling a little bit lower, instead of a little bit higher because you're getting a little more greedy because of the premium that you saw that think like that I'm gonna get to keep all the premium until the expiration, and then all of a sudden some event comes in and there he goes. At least a covered call, your shares will offset, will help you, but doing it on a regular option trades and stuff, man. Oof. Yeah, yeah, yeah. I don't even. I'm never ever have that. Because I'm a pure, mostly a debit guy. I just pay for it. No loss has ever bothered me. If I'm wrong, if I end up losing money on a trade, I'm fine with that. I know I can make it back. It's not a problem for me at all. But I'm I don't wanna put myself into a corner and constantly thinking like I hope a price just stays below the certain price strike that I sold. Because you you putting too much on a line to receive a lousy credit, but you just don't see that anything can happen. Just what most because lower because more lower the strike that you sell, well, obviously more credit you receive. Higher you sell, well, there's not that much premium left on those ones, so there's no, so it's all, yeah, I mean, well, credit spreads are good when IV elevates. That's the best way to sell premiums. But at the same time, it's very dangerous. I'd rather just pay for the trade, just don't have that stress of taking a massive risk. That's why most people just get flush out margin trading. So what Bitcoin did to people. Margin trading, yeah, it has the edge, but it just has a massive downside risk in case if, because especially the most volatile stocks, I mean, Bitcoin is it's nuts, the way it moves. And now Bitcoin, once it goes and it goes, then it's not turning back for Bitcoin either. So it's always like this. It's just a crazy volatile, risky asset. So coin, whatever you want to call it, currency, but yeah, debit is just stress free, man. You never ever oversize a position and just pay the debit. You say like, okay, fine. If I'm wrong, I know exactly what I pay for it. I mean, if you have second doubt, thinking like, I don't think it's gonna, just cut the trade out. You know, cut it off. Nothing is gonna happen. There's nothing special about this dip, anyways. That's the only thing that I've been more and more. I'm looking into this. I mean, I know the range is high, but it's not any different. 9.4, 8.7, 8.1. I mean, what's so special? You know, for the cues that they're just is where this growth is taking a leg down and this rotation and 8.1% rally for the box up, 8.7% decline. So that's just a complete washout, correct? October up, November down. So entire move up is a complete washout in November. December went inside. You see this box right there, just went inside the range of November. So stayed inside 4.8. Rallied back up on January, box shift up 4.9. February tipped down 5.8. March 9.4. But look at the range 9.4, 8.7. It's the same thing. It's not like all of them are like 4%, and all of a sudden you took a 10. You're like, okay, wait a second. This is twice as bigger than the rest that we're seeing. This is the best way that you can visual a chart. Just watch where the box will because it's adjusting with time and price every single day, right? It's just a matter of like, okay, I'm starting a new month. I am looking at like, okay, well, we had 2 months of boxes that to the downside, correct? And we have a range of a March. We know how much is the range that we are up from the low, how much we're down from the highs, right? So that's the extreme ranges right there on the side. And we just need to see like, okay, well, how far does it go? And where's it? It's just a matter of like how many does it stretch? It's gonna stretch at least 4.9 to 5%. Okay. So far, so what we can do is this box, even when because we can count from here to here, it's gonna be From here to here is going to be much higher because we're just going to keep the existing range for the month so far. Okay, it's 2.4 so far, right? So we're just going to keep this one. So this is the range for 2 days so far is 2.8. So we don't have, so from the low that we did, it's 5.8, right? But that happened in the previous box, not in this one yet. So that doesn't count the low. We're gonna just measure the existing range on the current box, how much what kind of a range that we're in. And then each day by day, so each if the next day is gonna be higher than this one, if it ends up going up, then the box will shift up. But the point is we need to we have this top, which is 613, and then we have this low 555. Right? So we just gotta have to see, okay, which side will break. Is that the box gonna fall down in April, or is gonna uh, go up above 613? That's the range. Excellent way to uh, to look at the price. We have boxes here. We have exact measured swings. 3 bar swings are work. I don't put any signals and stuff. I don't need those. I just need a visual read of a month to see how are we if we're moving, if we're stacking up, how much what are the ranges are, and we market like is. So what does it tells you here? It tells you one thing, that a normal month for the Qs are 5%. Okay, extreme ranges are close to 8 and 9. The average ones are at 5. That's it. That's all you can make for one single month. So if you do have an extreme dip, well, if it's going to bounce at least 50% retracement of the entire move up, you know, so it just for like if you take months and months, okay, of a price action here, so it tells you what does it tell you? This is why some of these people just need to calm down a little bit. You know, it's a 5% range on an average. On extreme, it goes up to 9%. That's the thing you just have to remember. Okay, it could be 10. Okay, because just double it, make it even, and just say like, okay, I'll go with 5, being as a normal, allow kind of grind his way up with this, and extremes are 10%. 5 and 10. 5 is your mid, 10 is your extreme. That's it. Well, now if you say like, oh no, the 1 month is going to be 15%, the next one is going to be 20%. Okay, well for that you need some crazy catalyst and the whole market rollover. You just would not seeing it. Not with the the other half of the sectors are doing. 7 of them are up, 4 of them are down. you know, it's just like it's always like this. I mean, it just there's nothing there's nothing too special about them. So here you have an S&P right there. S&P, Nasdaq, Russell, Dow, S&P 100, semis, SPY, Qs, IWM, XLK, all down, right? Financials are up, consumer. You see, like this is all down right there. So now if we go back to a weekly time frame, same thing. Now this one includes financials, consumer discretionary as well, and this one, XLP. On the MAG side, we have NVIDIA down, Apple down, Microsoft down, Tesla is down, Amazon is down, Google is down, Meta is down, Netflix is down, IGV is down. That's it. You see? So yes, for a market expansion at the stage right there is gonna take time. I get that. I know it will. So the negative sentiment right there that you see, you look this is what it is. This will move the market. This one is not going anywhere without the help of these. It's a fact. This side fuels this. This goes up, so does this. It's gonna follow. These are the leaders. I mean, what? Okay, fine. I mean, look, this is NVIDIA, right? What you can even make of this? So, I mean, somebody can explain me that. What can you make of this? What, this looks like some sort of like a five-way move, 8 swings off the highs or something that you can count that I cannot count. Show me. I just want to ask someone, show me how you can count 8 swings from the low. This. Okay, let's assume for a second. Let's say I make it as a 1, 2, 3, 4, 5. So if I do that, okay, it doesn't work. Let's say as a start first leg as a diagonal. So then I'm going to say like, okay, this is 1, 1, 2, 3. So you can just go sort of like a WXY and just say like this is 2, right? And now we're going to go like this. Let's assume that. First of all, Elliott is going to kick your ass right from the start. Where? Right here. Diagonals cannot be truncated. So instead of going this far, Elliott will just stop you right there. This is wrong to even make a case here for a diagonal. Diagonal can overshoot to the downside and to the upside, but they don't truncate. So if you've taken a wrong approach and a wrong start from here, but you try to make a case here, how do you think that is going to work? Because that's why Elliott's have these rules. You break the rule, it will stop you right there. This is beautiful right there. It'll stop you right there. So it's just, you need 8 swings anyways. So it just, I mean, I like this one. I think I was working on a wave count. I'm like updating a bunch of stuff right here. I was looking at this thing yesterday as well. Doesn't look bad. Looks pretty good. Nice 5-way move up. 1, 2, 3, 4. Like this. Make it red. A clean 5-way sequence I did on a daily time frame. took it down here, make a diagonal case, A, B, C, sort of like, see, look at this overlap, man. Come on. And then just do a C in the diagonal off this low for a little bit of an overshoot. So look at choppy move. You got a double support to the prior fourth wave right there. Now your downside for an ABC is always going to be a prior fourth right there, found support at 164, and now it's trying to make his way up. So does it, NVIDIA makes his way up? Yeah, I mean, the bottom line is this is not bearish. That's what I would just, this price action is not bearish at all. Working on this one is the same thing on these rats. The rats are, this is the April low. The same thing, 1, 2, 3, 4, extended fifth with the diagonal. That's the only way you can count this thing, because I tried putting 3 here before, did 4, and then you have a 3-way move. You're missing a fourth here. Diagonal definitely makes sense here. So it's valid. There's nothing wrong with that. So this move down here is the whole debate right now, because semis, they're holding pretty good. For semis are just fighting this for a very long time right there. This 244 number is a pretty sticky number for IWM is at 250 now. So there's a lot of chop going on back and forth in this 5 point range since last month. That's why the small caps are, you see, like it made the V here, and then it just, this is the upside that it got basically from here, even the fact that it just gives a reverse. So that's not the point. The point is the upside is from this high to this is 10.86% upside. So 10.86 versus 12.11. So you took, I mean, this is the only thing that I'm like, a market took a monster hit down here, but you only managed to go up 10%, but it took a lot of time here because it went into that diagonal. It's not more directional, directional more accelerate more into the upside. And then from here is just retesting the zone. That's the way I look at them. Now the question comes in, I don't know what this is, the 3-way move. Are we going to make another 3, make another 3? Are we going to, if we are already here, if we go this, and then we go this, some sort of a flat, a complex, a flat, whatever the case is, So there's one thing that I know for a fact, that once the diagonal completes, okay, your minimum downside is always going to be a prior fourth wave. We talked about this thing 1,000 times before. Okay, that's kind of your minimum downside retracement is your prior fourth wave. So, which is right there at 244. The 244 is basically is your major support here anyways, because the actual dip, the broken resistance here on the way down will work as a support toward the prior resistance. That's the resistance, old resistance that turned into a support on the way down. So this is where we at. So we'll see what happens. Are we gonna go do this? Are we gonna do this? You know? So that's the only debate. But for now, I think should at least see some sort of a bit of an upside with the overall market. Then from there, if we'll see. The market is all about war news and his tweets. And if you really notice, the market really even so this morning the job numbers came out 186 private payroll expectation was 78,000. Government payroll is down 8,000, right? Because he just and unemployment rate ticked down. The market really didn't even respond much. As you can see, if you, I mean, I know it's holiday, but market didn't really. There you go. Dow 96, Nasdaq 85, S&P 18 points. Didn't really respond. Market is not gonna respond. So this fake data means nothing. Markets are forward looking. Their expectations, they're expecting no more rate cuts. They're expecting higher inflation, higher oil prices, higher yield, no rate cuts. That could lead into a multi-generational recession. The people will be start calling them pretty soon, and that's it. That's their future predictions based on the environment that we're in. Does that change when he end this stupid war in the next 2 3 weeks? When he made the deal, like he's get to that point that he's just blowing the bridges now, infrastructure for no reason. I mean, I just a bridge cannot be a military target. I mean, a war, I understand, I mean, you actually go after military bases and things like this. But a bridge, people travels. I mean, they move, and in case an emergency or something, or like, oh my God, this is really, I don't know. Okie dokie. My wife is at work. I'm home. So I don't know. I'm gonna shut this thing off. Long weekend. I'm gonna take a time off. Go to Chicago tomorrow. I'm actually gonna go get a haircut later today.